Hi friends, welcome back. So headline, Nvidia on cusp of overtaking Apple as second most valuable company. And when I saw this today, the first thing I thought to myself was, this has totally got to be the top. And it turns out I might be right. So take a look at this. This is the chart of Nvidia here. And if you actually look at here at 10:31 a.m. on March 8th, 2024, Nvidia hit the price of $973.52. You guys can see it right there. After that, it took a crash and actually went down as much as almost 11%, currently down about 9% from the top. And yes, I understand that when you look at the chart, it says, down, 4.5% ish. But really, though, you have to really look at the whole thing. And I feel like this is the peak hype right here. Now, we're starting with Nvidia because it's essentially been the royalty, king and queen of the AI hype, which is basically on the premise that we're all going to be using AI. All the companies are going to be, investing in this thing. It's replacing all of our employees. It's going to make us a whole bunch of money, etc. And Nvidia was basically selling picks and shovels to take advantage of this stuff. The thing I've always questioned is there's a couple things. So one is the valuation of Nvidia, meaning that is it valued fairly? Because oftentimes stocks are based on the values essentially based on how much money they're going to make in the future. And one of the things that's going on with the chip companies is, yes, companies do need to buy chips if they want to take advantage of the AI hype, etc. But how often are they going to buy said chips? So, if you go out and you buy, say, $10 million of chips this year, you're going to do the same thing next year, etc. Chip industry tends to be cyclical, so you don't need to essentially upgrade all of the time. And one of the things that I was watching with this as well is how is it affecting other parts of the market? So take a look at this. Remember the opening headline was that Nvidia was going to overtake Apple as second most valuable company. This is the chart right now. So Microsoft is in the lead, followed by Apple, then Nvidia, and then Saudi Aramco, Amazon, Google, and then Meta Platforms. And it's actually really quite interesting because you can make the case a lot of the companies on this chart are related to AI hype. Are they buying Nvidia or are they competing with Nvidia? I also want to show you guys this as well. It's something that I've been watching. So not only do you have Nvidia crashing today, you also have what's our total market? Is it a fair value, overvalued, undervalued, etc.? So according to the Schiller PE, we're a bit hot right now, meaning overvalued. And you can see we're trading at 34.25. So historically, the mean and the median of this thing has been around 15, 16, 17, something like that. If you don't know, this is the essentially what are price of stocks compared to how much companies earn. That's basically what we're talking about here. The peak was actually back in the dot-com bubble, which is about 44, meaning the ratio against earnings to price of stock was way too high. We're currently at 34, so we're trading very hot right now. And we had a jobs report, which we'll go over in a moment here, which I think are also cooling things off. But I do want to show you stuff that's going around the market first. You can see here, so Nvidia was the big loser today. Also, Costco was a big loser, and Broadcom as well. And we'll actually take a look at some of the big movers today. So Coinbase is having a fantastic day. And in fact, it's funny because they had a fantastic year if you got in the bottom of this one. And I haven't asked you guys if anyone's in the audio, in the viewers or community/audience have gotten into Coinbase early. I'd love to hear about it. But yeah, you've had a great trade there. Other movers today, I can see this. New York Community Bank, big hurt today. Yesterday they got a bailout. It was like $1 billion, and they're trying to say, hey, everything's okay. I think there's a bit funky stuff going on with that. So me personally, I'd be very cautious on these kind of things. I lived through the great financial crisis, and I've seen banks come and go. So that's just my take on that one. I'm always cautious on the bank stuff. I don't trust it. That's just my personal opinion on that stuff. Also, too, Rivian is up a little bit today. They had their announcement, which we talked about, and I made a prior video about that. If you don't know, they had some new cars announced, and they look pretty cool, actually. Whether or not they actually hit market, that's another question. Who knows? And Tesla's also down today, and also Eli Lilly. Those are some of the movers today. We can take a look at this. So this is some of our indices, and I can see, what is it? Dow is up a bit. NASDAQ is down. S&P is down. And if you take a look at sectors, it looks like real estate is the one that's up today. Financial services, and then your tech is down, and even consumer staples. You guys can check this out. So we're a bit mixed. Also, I like to look at this stuff too. And if you guys haven't seen this stuff before, it's cool because you can kind of track, what's moving up and down, etc. So it's really your growth and momentum stocks are getting the hits. You guys can see that right here, whereas your value is doing well. And if you're curious, the big value investor is Warren Buffett. So he likes to say, or he and the late Charlie Munger would say, hey, you know what? we're going to pick stocks based on how much a company earns, like their actual valuation. Now, it is true you can make money on Nvidia and momentum and your hype. It's completely true. But you just have to understand where you are in the market and understand that this isn't necessarily based on valuations. Let's take a look at some of the news and headlines that were also moving around. And it's funny because when I was talking about peak hype, and I've been saying this for a while on the channel, but I just want to recommend it again. If you haven't seen the movie Bitcoin, check it out. It's on Netflix. It's pretty good. It's a documentary, and basically kind of covers the crypto world and also to the scammy world that we have, and also to the youth culture. I think it all coincides together. Also, too, there's another documentary which I recommend. I saw recently. It's called This Is Not Financial Advice, and it kind of covers Dogecoin from more of a retail financial perspective, and also the Dogecoin millionaire dude. Check that one out. And it's funny because the reason why I mention this stuff is this, when you see these kind of headlines that Nvidia is going to overtake Apple, and I'm thinking this is totally the top. And the reason why we track, say, like a Cybertruck story, it's kind of the same thing. We're going to look back 20 years from now and be like, do you remember when people were buying those dog coins? Do you remember when like Elon Musk said we dug our own grave with Cybertruck? Like 20 years from now, in hindsight, we're gonna look back and like laugh at this kind of stuff. We're gonna be like, yeah, do you remember when Elon Musk went on Saturday Night Live and like was saying Dogecoin's a hustle? Like all these kind of things are gonna add up, and you're gonna laugh at it 20 years from now. I promise you. I've seen this stuff before. And history sort of repeats itself. So let's talk jobs. You guys can see here, this is the 2024 February jobs report. Added 275,000 jobs. However, there's a couple of caveats here. We got to look at the numbers and sort of why the markets are wigging out. One is unemployment actually went up to 3.9%. And moreover, where are the jobs? So it looks like healthcare and social assistance is hiring, leisure and hospitality is hiring, and the government, and a bit of construction and transportation, also retail. It may not necessarily be where you want it to be. We know that there's been a slowdown in tech and slowdown in finance. Those are your higher paying jobs. But yes, there are jobs out there, but just not necessarily the ones that you want. Moreover, we're talking about sort of how this relates to the market. There was a couple funky things going on, and remember I showed you guys the Nvidia chart was like 1031. It hit 937 a share. Let's read this together. There was a revision here, which is kind of nuts. It says here, the U.S. economy added 275,000 jobs last month, beating forecast, but big downgrades. That's the key right there. Big downgrades to previous figures complicate the outlook for the U.S. economy. So basically what we're saying is that the numbers from the last couple of months may not necessarily be correct, as they had to do revisions. So it says here, however, February's 275,000 jobs, you mentioned that before, was eclipsed by revised totals for January and February, when 167,000 fewer posts were created than previously thought. So basically, feel like, hey, we got a bunch of jobs. And then they're like, oh, but January and December numbers were wrong. Oh, no, not so good. and that is essentially kind of fooling around with the numbers. And I'm just like, okay, what are you guys trying to pull over there at the labor statistics? But it is what it is. And these are actually the hard data here. It says, in Friday's release, the Bureau of Labor Statistics downgraded the new jobs total from January. So again, this is a change in the numbers that they gave us before, from a blockbuster initial read of 353 to 229. December's figure was cut from 333 to 290. So I'll let you guys decide what you want to make of that. But yes, the numbers were revised, which is a bit lame. I don't know the way to put it. And sort of now we're betting on maybe a June rate cut. Now, I want to caution you. Yes, I understand if you watch a lot of the pumper channels, or you watch, essentially your big Wall Street sort of mainstream media kind of stuff. They all want to say, hey guys, when the Fed cuts rates, everything's going to go awesome and you're all going to be rich. And I'll say not necessarily the case. That's just the narrative they're trying to talk to you. My particular opinion on this stuff is that the Fed doesn't really need to do anything at all. They could hold rates the rest of the year. But we'll take a look at sort of what the market is betting on. Market is saying at the moment in March, 97% chance of doing nothing. I think that's like 12 days from now. It's like March 20th is the next meeting. So maybe no change there. The market is also betting on in May, about 75% chance of nothing happening, maybe a 24% chance of some sort of cut, a small one that would be. And then maybe in June, this is what the articles are referring to, maybe you have a 57% chance of a small cut. So who knows? Yes, it's true that Jerome Powell said there's a possibility, but my personal opinion and stuff, they could just hold steady. The other thing too that was moving in the market as well, and this is related to Nvidia, is China is trying to do their own sort of chip industry thing. You can see here They're trying to like do, was it 27 billion into theirs. Moreover, we're kind of combating back and investing in here, but we're actually sending the money to Taiwan Semi, which is kind of interesting. And they're saying 5 billion plan. I think they're talking about Arizona. Samsung is talking about investing as well. And so we're having a divergence between the two, meaning that China and USA regarding the chip companies, because remember, Nvidia is also facing restrictions on the business dealings they can do with China. Also want to mention briefly, Biden had his State of the Union address yesterday. You can see here, this is the headline. Biden and Trump in 2 speeches speak to 2 visions of America. So I guess if you're in the Biden camp, it says here, you believe in a resurgent America making steady progress. If you're in the Trump camp, you're like, no, this is a dystopian backwater on a path to ruin. So my particular opinion on this is usually somewhere in the middle, right? I think that's a more reasonable approach. And also, too, just want to make this really clear. Don't bet on any politician out there to save your life or rescue you from whatever you're facing. You got to help yourself. And I try to stress that as much as I can on the channel. So be fiscally responsible, manage your finances, make sure your job is secure. If it's not, start reaching out to other companies, making friends other places, because you always want to have a backup plan in place. And again, do not count on any particular politician to come and save you. It's just not the way that the world works. Guys, I've lived through this a lot. I've seen presidents come and go. And at the end of the day, I still got to take care of myself. So don't get too caught up in this stuff. That's just my opinion on this. So anyway, love to hear your thoughts on this stuff. Thank you for your time, and I'll catch you next video.